End of last year, I invested in the edtech startup Junto as a business angel. And yesterday I took the train to Berlin because Junto is hosting an evening event here this evening for investors, for customers and other partners. Very much looking forward to that. So welcome to another coffee break here on my channel From Learning. My name is Heinrich and on my channel I want to help you to become successful in the first years of your career. Today in this video I will first talk about what it's like to be a business angel, how it all works and what the learnings are that I took from my first investment. And I will also talk about Junto, why I chose that specific company and how you can find companies to invest in as well. There are many reasons why one might want to become a business angel. One of them is for sure the potential financial rewards. And in one of my last videos I talked about how important that might be for you. I will link the video somewhere above here. The alternative to investing in startups might be to start your own startup, to found your own business. And of course, if you are able to build a unicorn and then do a successful exit, you might take home €100 million or even more, right? So that's surely the case. But on the other hand side, that's of course also very risky. I don't want to bore you with all the statistics on how many companies fail, but you could argue that being a business angel provides you still with the upside of having a life-changing financial event, of maybe then exiting with a couple of million euro, which according to this last video will be life-changing for you for sure, without all the risk of doing it just with one company, right? Because you can hedge your bets across a basket. I will talk more about that in a moment. Now, before we jump into the details, I do want to make the disclaimer that first, this is not supposed to be financial advice. Second, I'm surely not recommending to all of you to not do business angel investments. And third, I'm not talking here from the position of an expert, but I just started doing this myself. Over the last 2 years, I talked to many experienced business angels, and I just want to pass on some first learnings that I have acquired over this journey with you here in this video. So what does it mean to be a business angel? In its easiest form, it means that you find startups, find young companies, you provide them with money, and they in return provide you with stocks of the company, so with equity. If you look at the life cycle of a startup, you usually want to invest in the very early stages of that company. People often call these stages the pre-seed stage to the seed stage. This is a terminology that is widely accepted in the community. Now, what exactly qualifies a startup to be in one of these stages depends on the industry, on the type of the business and so on. There is a widely respected napkin from the big VC firm Point9. And they define the pre-seed stage in the way that you can see it here with these typical valuations. And this then can be contrasted by the seed stage. So what you can clearly see here is that in the pre-seed stage, the company often doesn't even have a product. It's more or less just a team. So you do need to make your investment decision just on the merits of this team. Contrasted to the seed stage, often the first prototype of a product already exists. Maybe already the first 1, 2, 3 customers have been acquired. And so this does give you a couple of additional data points to then base your investment decisions on. So what this of course means is because you're investing so early that the risk is very high. The chance of failure is very high, very significant. And I want to make this really clear. On the other hand side, of course, the potential upside, if then the business does indeed develop well, is very high as well. I will talk more about the economics of business angel investing in a moment. Now, the first question that you should answer is, why should a company even take money from you? And maybe this question surprises you. Shouldn't companies be happy if you are willing to invest in them? And well, the answer is yes or no. Surely you will find lots of companies that would be happy to take your money. But at the other hand side, the most promising, most exciting startups often have lots of people who want to invest in them, lots of people who want to give them money. So you need to ask yourself, what is actually the value add that you can deliver potentially also beyond just investing the money that then gives a reason for this company to choose you as a business angel investor. So what value can you add as a business angel? And that of course depends for every single person. For myself, I'd like to think that that's first my reach with my From Learning platform. So this can help in first delivering relevant sales leads, but also get interest from potential employees. And recruiting is often a very big pain point for fast-growing companies. Second, with my work here at From Learning, I did acquire quite some knowledge on social media marketing. And this is a topic that is increasingly important for B2B business companies as well. This is a key sales and recruiting channel for these firms. And third, last but not least, it is my network that I acquired from working in consulting at McKinsey, from working in industry, in startup, and of course knowing today now many other influencers in the field who might be very relevant to get in touch with the companies as well. And these might be similar points you can deliver as well. Your expertise, your knowledge, your contacts, your network, all of these things are potentially relevant to companies you'd want to invest in. And of course, there are also some companies who are just happy to take the money from you to get the investment. And many investors will tell you that often the correlation between how hyped a startup was in the beginning and how successful it turned out to be in the end is often not even that pronounced. So don't let yourself get fooled by the hype that maybe surrounds the one or other company in the beginning. So the big question is, how do you find the best startups to invest in? And ideally, you are able to not only look at a handful of companies, but look at lots of companies and then be able to really handpick the ones that are most in line with your target investment profile. Over time, one of the most important sources of potential new startups to invest in is your network. If you have the reputation that you are an easy person to work with, that you're delivering real value to the startups, this news will spread in the startup ecosystem and you will be proactively approached, not only by potential startup founders, but maybe also by VCs, venture capital firms and other players of the ecosystem who might want to get you inside the deal, get you on board as a business angel. So your reputation is key. This will be determining your success. To help you select the companies you then in the end really do want to invest in, it is helpful to ask yourself what this target profile should be. So at what stage do you want to invest in? Is it rather pre-seed, so very, very early on, where the risk, of course, is often a little bit higher because they're just barely starting out, but at the other hand side, often you also get a bit more for your money? Or do you want to get in at maybe a seed stage, where maybe the risk is a little bit smaller because they're a bit more advanced, but then, of course, also your angel tickets will get you less shares, right? So ask this yourself. Also, are there certain topics, certain industries, certain types of startups you're especially passionate about? Maybe because also you are able to add special value to these types of companies. These things, you should have them very clear because this will help you to select the companies that you want to invest in. One of the most important things to look out for when evaluating young companies is the team, the founding team, because often there's not much more out there to evaluate than the team itself. So let me give you a couple of things to look out for that also other investors will look out for. So if these things are not right, these companies might also struggle to get financing from big renowned VCs and so on. But also keep in mind that these considerations are always rules of thumb. So you will always find exceptions to this rule as well. And the first is that people don't really like single founders. So single individual people who found a company, and the reason is that these people might be overwhelmed in the end, right? Too much pressure, too much responsibility for just one person. So ideal founder teams often are 2 to 3 people founding the company. This is what you want to go for. Second is the background of the founding team. Ideally, you find people who have a proven track record of success, who have shown in the past that they can overcome adversity, that they are resourceful, that they can handle challenges, difficult situations, and so on. And this can be due to a very ambitious and successful CV up to that point. That can be due to successfully having founded a company in the past. Often people do also like former MBB consultants, for instance, or former bankers, because these people have shown that they are able to work under pressure and get things done. But of course, important as well is the idea that you're being pitched with. Because the truth is, if you want to earn serious money with business angel investments, what you need to look out for are companies that have the potential to turn into unicorns. So companies with a valuation of over 1 billion euro or dollar, doesn't matter in the current parity of these currencies. So ask yourself, what problem do they want to solve? Is it significant enough that if done correctly, this has the potential to maybe at some point turn into the new Google, turn into the new Meta, turn into the new Apple, right? This should always be at the core of your consideration. If you're not able to at least have the chance for a company to grow to such an extent, likely you will just burn money with your investment. Of course, if this is the main goal of what you're doing. Now let's imagine you found a startup, you talk to each other, and there's a mutual interest in doing this investment. The next step might be a due diligence, right? Don't you have to now do a legal review of the status of the company, of everything that's going on? Well, and here I think many people are wasting lots of time, money, resources. What I learned from talking to more experienced business angels is that many of them actually don't conduct any due diligence in terms of a legal due diligence at all. And the reason being that very early on, when the startup is just getting started, often you don't have much to check anyway, right? I mean, what exactly do you want to look at? And second, if you hire a law firm, really do a full investigation for that, you will just often spend a multiple of your actual angel ticket just on legal fees and so on. So it doesn't really seem to be worth it, because what's the worst that can happen to you? In at least most cases, it's losing the initial investment. If you invest in slightly later stages, maybe a seed stage, it might also be worth looking for other investors, right, who join the deal. So who is the lead investor? If this is a big, renowned VC, venture capital firm, then chances are very high, usually you can trust that actually this VC did carry out a professional due diligence. So if such an investor did decide to invest, chances are high that actually there's nothing that this company is hiding, that they're looking good, at least from a legal perspective. In addition to that, the big VCs have also a reputation to lose for themselves. So often they will want to make sure that business angels are investing at actually fair conditions, that no one is getting screwed over, because if this is the reputation that these companies have, then in the future no other business angels will want to join their deals. So this can be an additional level of security that you might have here as well. One tip a more experienced investor shared with me when evaluating startups, especially in the pre-seed stage, is to spend time with them over the period of a couple of weeks and then ask yourself, what progress did the team show in these weeks? If the team said that they will do something, did they actually do this? How reliable are they? And then based on all of this, you can come to the conclusion whether you do want to make the investment or not. Now let's talk about the economics of business angel investing. And I trust this is a question that many of you have. How much money do I need to actually start as a business angel? And maybe it surprises you that typical business angel tickets are somewhere in the range of starting at 5,000 euro up to maybe 50,000 euros. And there are many business angels doing typical tickets of 10 to 20,000 euros. So this is something that can get you started. At the same time, I would advise you against just doing one or two business angel investments, especially if you're mainly doing it for the potential financial rewards. The reason being that the risk is of course very high if you put all your eggs in one or two baskets. What I would recommend you to do is to make a plan. So let's say you have 120,000 euro available that you want to put into startups as a business angel. A typical plan could be that now you decide to split this into 10 tickets of 10,000 euro each, and you keep the additional 20,000 for legal fees and other miscellaneous items that you might be faced with. Now, if you dig into the legal topics, of course, there are all types of clauses, provisions, and so on and so forth that might be relevant to you, and I will not even attempt to explain all of them to you. Two thoughts on this. First, much more important than really negotiating and understanding all of this is actually picking the right companies. This is what in the end will drive the return for you, and not if you're able to negotiate a double liquidation preference or not, or anything of the likes. And so second, my recommendation would be to pair up with a lawyer who can do just a very basic review of the term sheets to check that there's nothing in there which is super unusual. And as a bonus tip, another more experienced business angel shared the following very basic question with me to make sure that you're not unfairly treated. And this is to ask whether you will receive the same share class, so the same type of shares as all the other investors in the round. Because if the answer is yes, then you can be quite sure that at least this is not something to screw you over. Then at least you can potentially trust that other more experienced investors in the round will have negotiated all these basic things in the good and correct way. So if you do all that, if you did find 10 companies to invest in this way, what you will be hoping for is that only one of them actually makes it. Only one of them turns maybe into a unicorn, because if this is the case, very likely if you did everything correctly, you will not only recover the investment of all your other startups, of all the other tickets that you placed, but in addition to that, due to the returns on this one thing that then actually made it and was successful, you will very likely go home with potentially several millions in the bank. But of course, be aware that the time horizon for this is rather a long-term horizon. It can easily take 5 to 10 years to really realize any of the gains that you can accrue by investing in these startups, sometimes even longer. So surely do not invest any money that you really couldn't live with. If you lose that money, do not invest money that really you need in the next years. Surely investing as a business angel is a rather advanced way of investing and not necessarily something for beginners. So we arrived here at the evening event of Junto, the startup company I invested in end of last year. It's going to be an exciting evening about personal branding strategies with great speakers such as Diana Zolöwen and Celine Villas. Very much looking forward. Enjoy me now. I'm here with Marius, the founder of Junto. Marius, first of all, thanks for the invitation that I'm able to join this event. It has been an awesome evening. For the uninitiated out there, may I ask you just to introduce Junto in a couple of sentences?
Sure. So if you want to accelerate your career and learn from world-class operators who build companies like Amazon, like N26 or Google, come to Junto and learn from a membership of cohort-based learning and a community of like-minded peers. We're providing a business education platform for all of you out there. And by the way, if that sounds interesting to you, we're also hiring a team across positions. So have a look in the comments and find why Junto could be your next step.
Thank you, Marius. So indeed, lots of opportunities. Try out Junto for your organization, maybe even join the team. I will leave a link to Junto in the video description. Feel free to check it out. Now, I would be interested in your perspective. Do you have any tips to add to this topic of business angel investing? Let me know in the comments. And if there was any value at all that you took away from this video, destroy the like button for the YouTube algorithm and subscribe to the channel to stay up to date on all my content. Big thanks to all the members of From Learning as well. My name is Heinrich. I release weekly videos here on the channel. See you again next week and bye-bye.